This is Fintech Chatter, presented by Tier 1 People, leaders in Fintech executive search. And I'm your host, Dexter Cousins. Today, I'm joined by Macgregor Duncan, GM of Corporate and Business Development at Westpac. Macgregor's responsible for M&A, strategic investments, and partnerships. He's also the co-CEO of Westpac's new digital bank and sits on the board of 10x Future Technologies, Westpac's banking-as-a-service platform provider. Tune in for today's show as Macgregor talks about the 10x platform and how they're working with some of Australia's leading fintech to provide banking-as-a-service. Welcome to the show, Macgregor.
Thanks very much for having me, Dexter.
Really delighted to have you with us. Bit of a special one for me, given that we were involved in helping 10x launch here in Australia. But I wondered if you could tell our listeners a little bit more about your role with Westpac.
Sure. Well, I'm the General Manager for Corporate and Business Development, which is a sort of a mouthful of a title, but it really boils down to a handful of responsibilities. So I run Westpac's M&A team, which in the current environment is responsible mostly for divestments of large assets as Westpac looks to simplify its business and focus more on a handful of core businesses. Then secondly, I run an investing team, which is a little bit like an internal private equity fund. So we invest directly on the Westpac balance sheet. But we also oversee a venture capital fund called Reinventure. I'm sure many of your listeners have heard about. And then finally, I'm also responsible for Westpac's new digital bank as a service. And I'm sure we'll cover that topic at length during this podcast. As you mentioned, we've partnered with 10x on that capability, and we're looking to bring that to market with Afterpay in the coming weeks.
Fantastic. I guess the big question everyone will be wanting me to ask is, why has Westpac gone down the path of banking as a service?
Well, it really boils down to a couple of larger strategic developments. And, you know, the first of those is just the changing nature of distribution. One way that I sort of describe it is that historically banks were sort of closed shops where they would both manufacture and distribute. And increasingly we're moving towards more of an open architecture world. And in terms of distribution, that means that financial services are increasingly becoming distributed by third parties, especially as digital capability enables financial services to be embedded inside third-party partner apps or other customer experiences or other workflows. So there's that sense that payments is becoming an enabling capability that sits, within an existing customer experience. We see that obviously offshore with some of the digital wallets, say in China or increasingly in the US, but in the Australian market, we've seen companies like Afterpay and Zip, where the financing, as it were, or the payment of is sort of enabled through a different shopping experience, and so we think that's a trend that's likely to continue into the future. And so our digital bank was really an opportunity to provide that capability in a way that could be embedded inside those other customer experiences.
Yeah, and I guess we've seen, over the last couple of years, partnerships, Apple, Goldman Sachs, Google, I think will fairly soon get to the party. Amazon's already started down that path. There's been a lot of talk about big tech being a threat to Australia's big four banks. Do you see that as being the case?
Over time, you can definitely see a world where any company that has a deep relationship with customers could find themselves in a position to further deepen that relationship by offering financial services. Now, that could be some of the larger tech companies, But it could be a range of companies who have just utilised their existing customer relationship or utilising data analytics to provide the type of customer experiences with access to financial services that customers want. So, really anyone who's focused on solving the pain points of a customer with respect to financial services could, over time, prove some kind of threat to incumbent financial services firms. I think it's important that for those of us who work in and around financial services, we often tend to be interested in these things and how they work. But for most people, financial services and banking is really an enabling capability, something that they would prefer was managed in the background. And to the extent that tech companies or others can integrate financial services and banking within people's lives and within their existing workflows, I think that will definitely represent a threat to the way traditional banks manage their customers and financial services more broadly.
So it was a massive announcement with Afterpay. I'm not sure if there's anything similar globally in terms of this type of partnership. Can you tell our listeners a little bit more about the partnership and the types of services that Afterpay will be able to access and offer their customers through the 10X platform?
So Afterpay today have a buy now, pay later proposition, sort of a pay in 4 installments. But of course, they're looking to broaden the relationship with their customers and offer a broader set of products and services that meet their customers' needs. And so in doing that, a natural extension from buy now, pay later is into a sort of transaction banking services. So, transaction accounts and savings accounts and a range of payment services. And really that's the sort of the enabling capability. But from the perspective of Afterpay customers, what they can expect to see is a way to manage their money, to save, to meet goals, to smooth their cash flow in a really seamless and embedded way. Now, Afterpay themselves were not interested in becoming licensed ADI, an authorized deposit-taking institution, because, of course, there are a huge range of regulatory and compliance obligations that go with that, which are arduous to meet, rightly arduous to meet, and require a great deal of expertise and skill. What the partnership really amounts to is a sort of it's a little bit like David Ricardo's law of comparative advantage in trade. There are one party focuses on what they're really good at and specializes in that, and the other party specializes in what they're comparatively good at, and they then come together and trade or partner, and the net result is beneficial for both parties. So I think that's exactly what's happening here. Afterpay is obviously a highly innovative company that has demonstrated an amazing ability to meet its customers' needs, a very flexible and nimble mindset. They move quickly to take advantage of opportunities, and they're very much focused on the customer experience for their, in Australia, for their 4 million customers. Westpac, on the other hand, is it's a company that can manage banking at scale, demonstrated over 200 years that those skills, and it's very good at it. And so, in that respect, what Westpac's looking to do is manage all of the underlying banking capability, which is obviously the technology capability, but it's also all of the balance sheet management, the regulatory and compliance obligations associated with the ADI, and presenting that up to be distributed through an Afterpay app to the Afterpay customer base.
So you recently announced Society One coming onto the platform as well, which is a reinventure-backed fintech as well. How do you see kind of more partnerships like this working, and do you have other partnerships lined up for the future?
Well, when we started down the path of bank as a service 18 months ago, or closer to 2 years ago now, we did it in large part based on partner demand. So it wasn't really a sort of a build it and they will come strategy. It was based on the fact that a lot of our portfolio companies, both our direct and our reinventure portfolio companies, were interested in embedding financial services within their propositions, and they came to Westpac and asked us whether we could provide transaction accounts or payment services or mortgages. And the answer that we had to give them was no, we can't offer those services, mostly due to the limitations of our legacy technology capability. And so we didn't have a set of partner APIs, nor was Westpac even set up to really distribute product in that fashion. And so what we did was we partnered with 10x, which, as you mentioned at the outset, is a UK-based company founded by Anthony Jenkins. And it's a cloud-native technology platform which allows multi-tenancy, which is to say it allows one single sort of banking platform to service many different brands or partners in market. And it's a platform that we've built specifically to enable banking as a service. And so in that sense, the new technology is tailor-made for not only ease of sort of manufacture of these financial service products, but its systems are, as I said, cloud-based. The entire system is built around customers and customer data rather than from a product-centric perspective. So really, it's an entirely new capability, which allows us to pursue this opportunity. The Society One partnership that you referenced is obviously exciting for us. It's different from the Afterpay partnership in some respects, but broadly will look the same. Society One looking to provide banking capability through to their customers. I think from our perspective, what really excited us about Society One, in addition to it being a Westpac portfolio company, as you said, is that it has this incredible top of the funnel from a customer acquisition perspective. So it has some strategic partnerships with Seven Media and with News Corp, and it gets I think it gets something close to a million hits a year on an annualized basis, the top of the funnel. But it's sort of, it's only able to convert a fraction of those through to a customer relationship because Society One has only a single product, which is this personal loan. And so by expanding the product set that Society One can offer to those million potential customers who are arriving on their website or on their app, I think there's an exciting opportunity there to increase the conversion rate through to end customer.
Now, this is a twofold question. First is to give you a little bit of kudos, because I think the whole world knows that the Australian banking industry has faced some real challenges around remediation coming out of the Royal Commission, and there's obviously been a lot of money spent on fixing that. Often at the kind of sacrifice of innovation. How have you managed to kind of keep the innovation ball in the air and really focus? I mean, this is, I keep saying it, but it was such a landmark kind of flag in the sand that, everybody was talking about open banking, and then you came with, right, we're doing it. We're going to be building a banking as a service platform right in the midst of when all of this was happening around, the kind of washout of the Royal Commission. So how have you managed to kind of keep that focus with the business of, the eye on the future and building for the future, with all those challenges?
I think there were a couple of things that were helpful. We were, in the first instance, we've been lucky to have the sponsorship of, successive Westpac CEOs. So both Brian Hartzer and Peter King been supportive of what Westpac's trying to do with the bank as a service proposition. I think, and I think beyond that, I think what Westpac has always focused on is less of the shiny innovation. We've been always more focused on trying to do, fewer, bigger things, where with a real focus on what's the underlying business model, and how could that potentially, materially impact Westpac's P&L. And that's a difficult thing to do when you're talking about a company that makes, significant amounts of profit each year.
There's been some really bold investments in the Reinventure portfolio. Coinbase, Immutable. Yeah. I mean, these are, you would looking at, based on what you've said about Westpac not focusing on the kind of bright, shiny thing, and they're doing some really cutting edge stuff.
Yeah, definitely. I mean, I think, obviously, the Reinventure teams sort of had a tremendous, some tremendous success particularly with the Coinbase investment that you just mentioned. But I think there's, I think the point that I'm trying to make though is that there's just been a continuous focus on trying to place your bets on things that can really move the dial. And so, we've been always more inclined to sort of say, well, we're going to put a big investment behind. We invested in Zip, 3 or 4 years ago, and we invested sort of $50 million. And at the time, Zip was really, buy now, pay later was not much on the Australian, financial services landscape, but we sort of, we had high conviction and decided to, put a lot of money behind that. And similarly on the digital bank, I think we've done something similar, high conviction around a strategy and go really hard after it. And I think that's ultimately what you want to be doing. You want to be making big strategic choices where, where if you're successful, they really make a difference. And frankly, if they're unsuccessful, you've had a lot of. You
call Dexter and say, I might be looking for another job.
Yeah, exactly. And that's sort of two sides of the same coin. But I sort of think that's the mindset that you need to have. Like I want to really make a difference, and so therefore I'm going to sort of live on the edge. And I think that's important because otherwise you just end up with sometimes you hear the sort of let 1,000 flowers bloom. Obviously you can, some of those may be successful, but sometimes they're not going to be successful on a scale which really matters. And typically inside large organizations, large banks are a good example of this. A lot of the innovation just tends to be very much sustaining innovation. So it's just really incremental changes around the edge. And part that reflects the fact that there's nearly always a common mindset within companies about how things ought to be done. Very hard to break out of that mindset. And so you just get tinkering. And by tinkering, tinkering's important, and that you can definitely improve if you're improving 1% each year, that still adds up to something over time. But it's not, it tends not to be the big changes. And so, I think when you're a corporate or business development team and you've got responsibility for, what are the big, what are some of the big initiatives that might materially, alter the course of your company's future, it's really important to be putting a lot on the line.
We're going to take a quick break, Macgregor, whilst I plug something that we're working on. Tier 1 People helps world-class fintech launch, scale, and innovate. As the fintech industry in Australia begins to mature, many of our early startup clients are now becoming enterprises. And as fintech goes mainstream, many enterprises are reinventing themselves as fintechs. Tier 1 People proudly works with companies at the forefront of fintech innovation. Our clients include international fintech, corporate ventures, big tech, tech platforms, banks, payment providers, and financial institutions. We're about to kick off a number of searches for talent with expertise in merging fintech startups with banks, technology integration specialists in lending and banking, and those with expertise in transforming legacy financial services businesses into fintech. If you'd like to be on our radar for these upcoming opportunities, go to info@tier1people.com. Welcome back, Macgregor.
Thanks, Dexter.
Right, so we were kind of touching on, I guess, some of the cultural elements about innovation within incumbent banks. How are you tackling those cultural challenges, particularly when you're bringing together, say the culture of an incumbent bank with that of a fintech startup? Because I often use the analogy, it's like trying to mix oil and water.
Well, that's exactly right. I mean, and there are challenges. There's no escaping that. And you wouldn't expect anything less. So sometimes it's the banks are large companies. They manage very complex products and systems. They've got large numbers of customers. They've got social obligations, regulatory and compliance obligations, and that's a complex set of things to manage. And banks don't take that lightly. Nonetheless, it's if you believe that it's important to strike the sorts of partnerships that we've discussed already, you need to be able to move in a way which can accommodate the pace and speed of organisations outside of a large bank. And so for us, we've set our digital bank up separately from our core divisions. We have a degree of flexibility there, and we try to, you'd mentioned from a cultural perspective, we definitely hire in people that are suitable within that role. Most of our team has worked both inside large banks and inside fintech, so they've got experience working within different cultures, and I think that helps to be able to, identify and sometimes empathise. So we make that a priority, and then and beyond that, I would say we try to organize ourselves in a way where we can be really clear on who's making decisions. We try to make decisions quickly. We try to keep committee meetings and the like to a minimum, and we assess ourselves based on outcomes, not on process. I think that's a really important one within a large organisation, because I think if you take some of the incumbent banks, really what they run is sort of annuity style businesses. So they're massive businesses that have been around for a long time. And so the skill set that is needed to run those businesses effectively is a managerial skill set, but that's not a growth skill set. And so what tends to happen in large organizations, they become very focused on process and governance, because that's the managerial skill set to make sure that things don't go wrong. So that's really but you're not, for most of the managers inside large banks, they're not sitting there thinking, what new products or services or what customer pain points am I trying to solve? They've got an annuity business and they're trying to run it as efficiently and as effectively as they can. And they're trying to make sure that service is not disrupted, and that everything's running perfectly and smoothly. And as I said, that's a huge challenge. I don't mean to, that's an amazing skill set, but it tends not. But it's not the growth. It's not a growth skill set. And so, when you're building a new growth business, you need to be really clear that you're looking for different skills, and you're judging yourself based on different outcomes. So, as much as a large organization will try to overlay process and governance over a growth business, it's really important that you constantly push back and keep a firm eye on outcomes.
Yeah. What are some of the qualities you look for in people when you're hiring?
So certainly in my team, I'm focused on a couple of things. So an ability to work well in an ambiguous environment, because lots of the things, particularly in the growth businesses that we've just been discussing, there are oftentimes there are no obvious answers. Lots of things go wrong. You're testing in market to see if you can get, the sort of product market fit. So you definitely need someone who's comfortable with that ambiguity, and they're not just being a clear roadmap that can be followed. And that's as we were just saying, that's a different. If you go into the core of a large bank, what you'll find is a lot of people who really thrive within a very structured and ordered workplace, where it's very, very clear boundaries, very clear responsibilities, and you come to work and you've got to do these, 20 things, and if you do those 20 things well, everyone will be pleased. And I think when you come into where you're trying to build a new business, that's not what your day looks like.
Yeah, we often say to anybody who asks us for a job description, we know they're not going to be the right person, because even if we could come up with one, it'll change within the first month.
It's exactly right. Then next, like cultural fit, obviously is huge, and everyone says it. And people have their own ways of identifying whether people will be a good cultural fit, but certainly in the teams that I've run, it's just it is the absolutely essential ingredient. And it's absolutely critical to team cohesion and the willingness for people to put in long hours and do things for each other. So that's essential. And then finally for me, a really huge thing is general curiosity. So I'm really interested in people who are interested in the world, who read widely, who are digesting lots of information, and not just about financial services or technology. I'm interested in people who have a much broader remit and interest in the world beyond financial services, because I think the ability to bring to bear a wider general knowledge and curiosity on the challenges within financial services is also very important.
Yeah, I couldn't agree more, actually. I think that you used this word earlier, empathy, and I think that's one of the things I often feel is missing when I'm, as a customer of a big bank, particularly when I'm stuck on hold for 30 minutes listening to hold music and trying to fix a problem. So I think it's, those things that you talk about and those experiences, everything that you've mentioned, Macgregor, I think is, exactly what we see when people struggle to make that switch from a banking environment to a startup environment, and that whole focus on process and task-oriented stuff versus just outcomes and making things happen.
Yeah. I think that's exactly right. You mentioned the empathy point. I do think that's very important. I do think sometimes large organizations can be somewhat misunderstood, and I think sometimes there's this disconnect between sort of the good intentions inside large companies.
Yeah.
And so the complexity of the systems, and not just the systems, but the complexity of the businesses. So these are, if you take a lot of the large banks, they're running, they're huge companies. They're $100 billion companies that are running, just even the divisions that they're running, whether, a consumer bank or a business bank or an institutional bank, I mean, these just the divisions themselves would be ASX 20 company. And so, they're big businesses, they're complex, there's a lot of people, and you get this organizational and technology complexity that just becomes very difficult to manage. And then you try to manage that through process and governance that slows everything down. And so that's a big part of the reason why, coming out of the Royal Commission, I think all of the banks have arrived at the same conclusion, which is they just have to simplify. And so there's a huge effort to divest non-core businesses, to get back to, the very basics, and to try to excel at those basics.
Yeah. And let's not forget, I mean, we've got some of the best banks in the world right here in Australia.
Yeah, absolutely. I mean, and certainly just purely from the way that they're capitalised, but also I think from the way they're run. And that's a partnership between the large banks and the Australian regulators. I think there's a lot to be proud about in Australian financial services, and frankly, that's not just. That absolutely extends out into the fintech community as well.
Well, that's a really great way to kind of come to my final question, which is, other than the things that you're working on with Westpac, what's got you most excited about fintech right now, and why?
There's so many interesting new business models. I think we've seen a lot of change within the payment space over the last 5 years, and I think we'll continue to see evolutions in payments, which will be really beneficial to customers, both from an ease perspective, but also from a cost perspective. I think some of the things we talked about earlier with embedded finance, and really seeing financial services put into new customer experiences or embedded within existing customer experience, I think really exciting. And then I think there's a whole world which is about to be explored around sort of decentralized finance and distributed ledgers and the like. And it feels like that topic's been around for a while now, and we haven't really seen. I think if you look back 3 years ago, there was a lot of talk about distributed ledgers and blockchain, and we've not really seen the use cases come to the fore. But it's hard to see that doesn't, that over the next decade, we don't just see an explosion in use cases around decentralized finance, and the use of new, technology systems to effectively manage what are trust-based systems today.
Yeah. I've got to say, it's blockchain week, the week that we're recording this, and I was at the ASX to see Senator Bragg do a presentation, and I really got a very similar feeling to when Cybos was here in Sydney in 2018, and having been in fintech from the early days of 2015, it felt Cybos almost kind of legitimized the fintech industry, and hey, this really is now a thing. And I'm starting to feel the kind of same way about blockchain now, having been, I wouldn't say skeptical, but certainly kind of wondering how it was going to evolve. It feels like now that, we could be really at the beginning of you said, a really transformative decade. Yeah.
We're just waiting for you're just waiting for one or two, really compelling use cases to emerge. And not just emerge, but gain traction. I think. Yeah. I think there's been a lot of maybe for those of us who are sort of in financial services and following it, there's just been a lot of discussion about distributed ledgers for years now. But and we've sort of been waiting for those revolutionary use cases, and they haven't as yet materialized. At least none have gained sort of significant market traction. But it does just feel like a matter of time before eventually you start to get a roll on, and it could just result in a very different way that financial services is architected.
Well, Macgregor, it's been great to have you on the show. Before we wrap up, what can our listeners expect from Westpac and the work that you're doing over this next 12 months?
Well, we'll go live with Afterpay Money in the second half of this year. So that'll be a really exciting milestone for Westpac's new digital banking platform.
And for the fintech industry here in Australia.
Yeah, exactly. And I think a lot of people are looking even globally at the model.
Oh, yeah, absolutely.
And how Afterpay's customer base react to that offering. We'll go live with Society One later in the year, and I would anticipate that we'll have a handful more announcements around new partnerships in that space as well.
And if people wanted to kind of find out more or get in touch, what's the best way for them to do that?
They can ping me on LinkedIn. Is probably the best way of doing that. I'm actually only a sporadic LinkedIn checker, but when I do check, I try to reply.
And you can find me, Dexter Cousins, on LinkedIn and Twitter. Thanks for listening. And if you like today's show, please subscribe to the podcast. And don't forget to leave us a review, because it really helps me bring on great guests like Macgregor. This show is produced by Tier 1 people, leaders in fintech executive search. We'll help you launch, scale, and innovate by delivering world-class talent. And you can reach us, info@tier1people.com. Until the next episode, stay safe